Alright everyone, let's not waste any time. If you're holding, mining, or even just watching Pi Network, you know exactly what's happened over the last few days. Picoin just saw a massive 45% crash after that brief hype cycle from the consensus announcements completely faded. But the big questions you're asking are, what exactly caused this sharp drop, and more importantly, is this the bottom, or is there more downside coming for Pi? In this video, we're going to dive deep into the charts, the on-chain data, and cut through the noise to give you a clear picture of what's happening and what I think could be next for Pi. Hey everyone, welcome back to Zacchy Crypto Update, your essential source for clear, actionable crypto analysis. My goal here is to give you the insights you need to navigate these volatile markets. If you're new, make sure you hit that subscribe button and ring the notification bell so you get these critical updates the moment they drop. Let's look at the raw numbers because they are stark. Just a few days ago, from May 8th to May 13th, we saw Pi's price surge. It rallied from around 69 cents and actually spiked as high as $1.57. Now, if you were watching back then, you know this pump was primarily fueled by announcements coming out around Consensus 2025. Specifically, talk about shutting down the central node and the launch of that $100 million Pi Network Ventures fund. The market cap responded just as dramatically. It almost doubled in 5 days, jumping from $4.5 billion to $8.8 billion. That's a massive amount of value added on hype. But then, the air came out. Fast. In just 3 days, from May 13th to May 16th, Pi crashed, losing over $3.7 billion in market cap, falling back down to around $5.1 billion. The price plunged back to where it started before that pump, now trading around 69.84 cents. This rapid rise and even more rapid fall tell us something critical right away. Pi's price is still heavily reacting to short-term news cycles and hype, rather than showing sustained growth based on fundamental adoption or utility. The market attention was brief, and the drop has traders on high alert. Now let's get technical. What are the charts telling us right now? That rally on May 8th did push Pi above the short-term moving averages, but the crash has completely reversed that. Look here. Pi is now trading below the 20, 50, 100, and even the 200-day exponential moving averages. These EMAs, which were potential support levels, have now flipped into resistance. This is a bearish technical signal. Momentum is clearly to the downside in the short to medium term. Next, let's look at the MACD. The MACD line has turned bearish and is now poised to cross below the signal line. While the histogram isn't full-blown red yet, it's narrowing, confirming that the buying pressure that fueled the brief rally has completely evaporated. And the RSI? The Relative Strength Index, which measures price momentum, is currently sitting around 42. This isn't oversold yet. It points to neutral to bearish momentum. It has room to fall further before reaching levels where we might typically expect a bounce due to being technically oversold. Finally, the on-balance volume, or OBV. This is crucial because it shows net buying versus selling pressure. OBV has dropped over 12% from its recent peak. This isn't just price falling. The volume is confirming that net accumulation has slowed significantly, if not reversed. Based on this technical picture, the outlook is cautiously bearish. We've lost key moving average support, momentum indicators are flashing red or neutral to bearish, and volume trends suggest waning interest. The price is currently sitting right on a key support level around 68 cents. This 68-cent level, along with 59 cents, were important support zones before that May 8th rally. Price is essentially settling back into the pre-hype range. This means buyers who stepped in at those lower levels are now waiting to see if that support holds again. If Pi breaks convincingly below that 59-cent support, the technical picture becomes much uglier. That could easily open the door for a fall towards the 45-cent area. My analysis suggests that without a significant positive catalyst, the path of least resistance, technically speaking, is currently to the downside, or at best, prolonged consolidation in this lower range. Technicals are one piece, but we also need to see what the large holders and overall activity on the blockchain are doing. The on-chain provides some fascinating and frankly concerning insights. First, volume. Volume is the fuel for any price movement. During the peak hype on May 12th, volume for Pi surged to an astonishing $2.2 billion. That shows immense short-term trading activity. But by May 16th, just 4 days later, that volume collapsed by 73% to just $588 million. This massive drop in volume confirms the hype cycle is over and liquidity is draining out rapidly. Now look at this CoinCarp wallet distribution chart. It shows the concentration of Pi holdings among the top wallets. Top 100 wallet concentration plunged from a staggering 98.76% on May 6th down to 14.76% by May 13th, and then settled even lower, under 5% by May 16th. At first glance you might think, wow, distribution, that's great. But the article correctly points out that this dramatic, rapid shift, especially happening during the price rally and subsequent dump, is unlikely to be organic retail distribution. This looks much more like internal wallet reshuffling or large holders strategically moving assets, potentially to facilitate selling during the hype phase or simply reorganizing their holdings. This rapid redistribution, aligning perfectly with the price pump and crash, strongly suggests that major holders took profits or reduced exposure as retail hype peaked. This on-chain action provides a fundamental backdrop for why the price crashed so hard. When the largest holders aren't adding and potentially selling into hype, price support becomes very weak. So, let's wrap this up. The Pi Network's 45% crash was a direct consequence of a short-lived, event-driven hype cycle around the consensus announcements fading away. The market cap swinging by over $3.7 billion in just 3 days vividly illustrates how sensitive and volatile Pi's price remains to headlines, rather than being driven by consistent fundamental growth or adoption. The technical indicators are bearish, signaling weakening momentum and potential further downside. The on-chain data, particularly the rapid collapse in volume and the suspicious wallet redistribution among top holders, reinforces the narrative that this was a hype-fueled pump that smart money potentially used to exit or reduce positions. Right now, the outlook for Picoin remains cautiously bearish based on this data. The price is testing critical support levels. While a relief bounce is always possible, a sustained upward move requires a genuine catalyst. Until we see concrete progress on those fronts, Picoin is likely to continue trading on speculation and be highly vulnerable to downside corrections when hype fades. Traders need to watch those 68-cent and 59-cent support levels very closely. Navigating these kinds of price swings requires having the right information fast. If this deep dive helped you understand what's happening with Pi, please give this video a like. It takes 2 seconds and supports the channel. And don't forget to subscribe to Zacchy Crypto Update if you haven't already. I'm here covering the critical market moves you need to know about. Alright, time for the crucial disclaimer. Everything shared in this video is for informational and educational purposes only. This is not financial advice. I am an analyst sharing my perspective based on public data. The cryptocurrency market is highly volatile and speculative. You could lose your entire investment. Always conduct your own thorough research and consider consulting with a certified financial advisor before making any investment decisions. So, that's the breakdown on Pi Network's recent volatility. Keep a close eye on those support levels. We'll keep monitoring the situation and I'll bring you an update if anything significant changes. Stay safe in the markets, manage your risk, and I'll see you in the next video. Peace out.